What is going on, YouTube? Hit it back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, Polkadot, as well as the S&P 500. As you guys know, I like to do a different cryptocurrency here on the channel every single week with your guys' help. So definitely make sure to comment your favorite altcoin down below, as tomorrow I will be picking a new altcoin to review for this, for this upcoming week's, videos. More importantly, what we're going to be looking at in today's episode is the recent trend that we're starting to see within crypto. Yesterday, I put out a video basically talking about how we're kind of hitting a top resistance. It was funny because the other day we were actually seeing prices slightly tweak a little bit higher than the top resistance levels that we had anticipated as price ceilings for Bitcoin, XRP, Ethereum, so on and so forth. And today we're kind of seeing that consolidation constantly being retested at that resistance level. And a lot of people are at that point right now where they're anticipating another break to the upside, which would be great. Don't get me wrong, breaking us through the massive trend line and downtrend that we have on these cryptocurrencies, but there's a big side that also thinks that we're probably going to start to consolidate and drop to the downside, which is pretty much what I want to share with you guys, my general opinion on what exactly to expect, where I think the market is going to be moving to, and so on and so forth. And then obviously, feel free to share your opinions of it down below. Otherwise, today's video is sponsored by Rex, not to be confused with Hex, the leading in the certificate of deposit cryptocurrencies, but Rex, which has a new outlook on CDs and plans to do even better things than the Hex token that pretty much most people know about in the space. But if you guys are interested in learning more about that, definitely stick around to the end of today's episode. Otherwise, definitely make sure to subscribe, turn on post notifications, smash the like button for the YouTube algorithm, and let's jump into today's episode. All right, guys, as you can see, top 10 cryptocurrencies, we're doing okay. We're up about 1.83%. Top 10, they're not really doing too well. Polkadot is doing the best. I mean, I'm going to quickly refresh this here. Yeah, it's just Polkadot that's up double digits. The other cryptocurrencies, maybe 2 or 3%. Nothing really too crazy, but that's kind of how the markets are trending right now. And more importantly, what I want to show you guys is the way these cryptos are trading. So I'm going to flash through some of these, and then we'll go in depth into each one moving forward. But this is XRP, we have Ethereum here, we have Bitcoin, we have Polkadot, and then obviously the S&P 500, which is closed today, so we'll have to look at it more in tomorrow's episode, probably Tuesday, because the video will probably be out before the market opens. But for XRP specifically, so just going through all these cryptocurrencies as titled in today's video, the reasons I'm seeing some problems with XRP, reasons for it to not want to move higher, obviously there's a few things. I mean, we can start off on the more microeconomic standpoint here. You can first start to see that we are retesting and have been retesting the top level of the relative strength indicators, signaling that we are at the top, and this is a big resistance, and that we are overbought. There is a slight uptrend we do have to consider. There is some sort of support that is kind of leading these prices up, whether it be that very, very, very tiny pennant flag formation, which we could probably draw right here, or just an uptrend that's probably going to hit resistance soon. Regardless of the direction, we are overbought. I mean, that's something to look at. Even zooming even farther out at the daily, you can see prices are also retesting overbought right now. We look okay on the MACD, slightly overextended, but for the most part, it's really just us hitting the top resistance, not only on the 4-hour, but the daily, all signaling reasons to correct lower, and all signaling reasons why I would not want to buy in anticipating a rally to the upside, because markets are, overbought. Now, the other reasons to consider why this is probably at a top is because it's also retesting its moving average, which we've done on numerous occasions here. Now, consider that we just crossed over into a bearish market right now. We just flipped on the moving averages, but regardless of that, we are retesting that top resistance right now. Let's say for whatever reason we decide to trend higher, which would be, fairly possible, but for the most part, fairly uncertain, and I don't think it will happen right now. But if it was, I can't see it going any higher than maybe 89 cents to correct back down. As you guys are starting to take notice, we did break out just recently of a big, descending fractal or downtrend or I don't know, falling wedge pattern right here. And we seem to see some sort of maybe double bottom formation where we have one and then we have two here. But for the most part, the downtrend is completing. It has pretty much solidified this bottom support here with showing possibilities of this bigger downtrend. And we only have about 3 confirmations, which is enough to secure the fact that this is resistance. But the fact is we are pretty much overbought on the other cryptocurrencies, which would give me enough reason to believe why we wouldn't see XRP head higher up right now until we get more room in these other altcoins and Bitcoin to head up higher. But for right now, I don't think this is going to trickle up higher. I think we're going to easily hit this moving average here and then pretty much start to consolidate or correct lower. Now, hopefully we do at some point correct upwards, but I think we need to consolidate and retrace a little bit in the other altcoins before we see any major movement within XRP. Now, looking at these other cryptos, we have Ethereum here, which is crazy. I mean, I'd like to say for sure that I've been calling this double bottom for a long time on crypto. We talked about it literally just last week. I mean, I have my charts pulled up or my videos pulled up. And if we just go back to last week's episodes, which should be right here, let me just go to videos. You can see right here, we talked about double bottoms forming about 1 week ago. You can see right here, clear as day, where we discussed double bottom patterns and anticipating, which is exactly what happened. Keep in mind, in this right here, we had the double bottom. We hit the bottom support. We head up higher. This was the target, what we've been talking about. If we were to break bullish, the target would be the moving average. Now, flash forward to Ethereum, we actually went slightly higher than that. But look at how perfect we discussed. The bottom would happen. We traced it out. And we head right back up to the moving average, and that's exactly what we're seeing here. And I did it in a few videos. We talked about right here, the double bottom formation, which you can see. Let me just freeze the screen. Right here, we have one bottom support, and we came back to retest the second bottom support, and we discussed right here, clear as day, that we'd probably see a trend back up to retesting the moving average, which is exactly what happened. So it was very easy, and that's why I like to reference both possible buy-in signals to the downside, to the upside, and really what we're trying to focus and find is the supports and the resistances, not necessarily the direction that we're going to be breaking to, but where the tops and bottoms would be in case we do decide to flip. There should be enough volume to carry us the way up and allow us to buy in really at any point. Now, notice each of these candles is considered a day. So you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days now to buy in to capitalize off this run. And we discussed bottoming off right here. If we close below this, this bottom support here, close closer to 1600, we would see enough volume to correct us and, fall probably all the way back down to next support, which would probably be closer to maybe $1,300, $1,400. We discussed if we closed above here, it would give us enough room and enough volume to swing us all the way back up to moving averages. Now, consider the fact that within this price range, we've seen about a 46% jump. That's plenty. If you bought in a day later, you would have had about 30% of a run to capitalize on, which is what we did, and we still are doing. It really wasn't a big issue. We did say that right here at resistances, if you had not got in, you might want to hold off for right now. But we discussed that once you buy in, create the stop loss, and then you can continuously buy in using, BitYard, for example, and just selling your position and moving that stop loss higher and continuing to enter that trade, looking at it as such, because BitYard for right now does not offer the stop loss that you can consistently move up. But who knows? There is a version update coming for BitYard very soon, which might offer us a big opportunity to start doing that. So I'm very excited to see what BitYard has to offer. I linked them also in the description if you want to check it out. Now, moving forward with Bitcoin, this is really the biggest coin to look at in regards to all these altcoins right now. You can see on the 4-hour, we're also retesting overbought. There is some sort of uptrend here that you guys notice, but not only is the 4-hour overbought, the daily is overbought. I'm sure the weekly is totally fine, but we'll look at that right now. No, weekly is totally fine. We discussed that there's problems where we currently are, and we could swing back down to the weekly moving average. But for where we are currently, retesting this top resistance, we're discussing possibilities that this might be the top here currently. For the most part, we've had a lot of problems between 30 and 40K, price ceiling, price floor. And we discussed that with this consolidation that we're having, where we do have 1, 2, and now this could be the third confirmation of top downtrend, just trading inside this descending triangle right here, that we might be a little bit in over ourselves or a little bit ahead of ourselves. Not only are we overbought, we're retesting moving averages, we're within a downtrend, we're overextended after a 46% pump. It's very unlikely to see that we now carry ourselves up for another 80% pump. Granted, it has happened. Don't get me wrong. This pump right here was about 87% in just like 3 weeks, which is insane. And it's very possible to happen right now, but understand this came all the way. We became overbought right here. So it did take some time. And then we consolidated, we kind of flatlined out, trading at the top, and then pumped even higher. So there is a very big possibility we could continue to do that. The only difference between last time and this time is back here in the past, we were on a bullish run. Reason why I would say that is because we were constantly creating higher lows and higher highs. So the consistency was there. Each time we went higher, it was higher than the last one. And each time we fell, it was higher than the last low. So there was consistency and there was rhyme and reason as to why we were continuing to move up higher and higher and higher. Now, flash forward to what's happening right now, it's the opposite. We're creating lower highs and lower lows. So each time we decide to try to, head up higher, it's lower than the last time. You can see right here, we have 1, 2, 3. It's lower than the last time. And each time we fall, it's lower than the last one. So it's a very consistent pattern right now. Throw that in with the moving averages, the downtrend, the overbought on the 4-hour and the daily, and it's just screaming reasons as to why we're hitting resistances and probably not going to see a pump higher. Now, the other day, I did slightly tweak the charts. I pulled it from where it currently was to right here, thinking that that's pretty much the top. But, we're trying to find right now the third confirmation. So the third confirmation pretty much reassures us that this is a downtrend. And we only had 2 before, so this one has a little more fluidity with it until we can get confirmation that it's at the top, and then we can be assured, we can assure ourselves that, okay, this is top resistance, we're going to correct, and now we can pretty much just trade inside this wedge right here until we consolidate and fill it in, and then we'll discuss whether we're going to explode to the upside or the downside. Honestly, I would rather be buying in and playing the guessing game here than here. There's a lot more play at this price. If we consolidated down and traded inside of here, it would be very easy for us to break the let's say we continue to do this and we broke here. It'd be very easy to break through the prior low and the prior highs than it would be now, because there's so much more, resistance, and there's so much higher up. So I do think that we're at the top right now. I think people are getting too excited. I mean, how much more room can we go to? But once again, the same features that we talk about as a conservative trader here on the channel apply to this. If we were to consolidate and break through here, I'd say comfortably closer to about $45,000. We can draw it out. I'll leave it here, no problem. Let's find 45K. If we close, I would say above that resistance right there, then, and I'm just going to draw it. I'll make it a little easier. So 45K is right here. If we close below or above 45K, so not above this downtrend, but above 45K, that level right here, I would be comfortable to buying in, anticipating markets have really realized that we're going to start to create newer highs and pump up higher. But once again, there is consolidation. I don't think that we can adjust this chart. I don't think this would align well. No, it wouldn't if it went higher. Even this, I don't think it would really align that well. So I'm going to leave it as such for right now, and we'll see what happens in the future. But for right now, I think that's a resistance. If we can break through here and close above 45K, I'd be fairly certain in a bull market. But until then, I still think this is a downtrend and a resistance, and I think we're going to start to see markets pull back down, and we're going to be switching to shorting back to 30K. That's my opinion. That's my thought on moving forward. As for Polkadot, once again, seeing a lot of uncertainty. It's at a top 2. It's now retesting overbought on the daily. It's very close to retesting its moving average here. I think we're going to pull back down. That's my 2 cents on this, so we'll see what exactly happens. Otherwise, S&P 500 looks okay, but otherwise, guys, before we wrap up today's episode, let me talk about Rex Token with you guys. All right, guys, I want to give a huge shout out to Rex Token for sponsoring today's episode. So if you guys haven't heard of Rex Token, let me explain pretty much what it is. Rex Token is a cryptocurrency that can also be regarded as a certificate of deposit, or a CD, providing users with premium interest rates in exchanges for staking. Rex is the world's first only CD token that lets you create time deposits, name them, scrape interest before maturity, split them, and even transfer them to other addresses. The Rex ecosystem consists of several smart contracts which run to the Binance Smart Chain. These two functions combined lead to something even newer. asset application plus passive income. Without doing anything, no third party, no middleman, no forms, no credit checks, no counterparty risks, and it also cannot be shut down. It sounds like some pretty democratizing finance, and it pretty much is. So not to get confused with HEX, which is the leading CD token. In contrast to REX, it runs on Ethereum blockchain, meaning that HEX users have to pay higher transaction fees. HEX does not allow sending your stake to another address, nor allows you to name them, split, or scrape off interest on immature stakes. This is where REX excels by providing unseen flexibility to holders. REX is a cryptocurrency designed for the storage and transmission of values with an integrated staking function similar to HEX, and it offers a higher rate of return than traditional certificate of deposits and immense flexibility by bringing in a plethora of new functions. Users can name these stakes to keep track of their purpose. A stake can be, for example, a vacation plan, so users know the funds are reserved for some time off. In case investors need funds, they can scrape off interest from immature stakes to avoid penalties. Its flexibilities goes even further, allowing stakers to split a specific stake into two in case they need to, or even to transfer their stakes to a different address. If a stake was meant to be as a gift, it can simply be transferred to the other receiver. So when a stake is opened, the REX is burned and converted into shares. These shares represent the stake size and length. Their price only increases over time and is determined by a global share price tracked in the REX contract. The REX ecosystem consists of several smart contracts on the Binance Smart Chain, so it offers the security and immutability of one of the largest blockchain networks in the world. Swapping REX on their website allows investors to participate in auctions and mint new tokens themselves. REX token supply is generated via daily auctions, with a total of 3 billion REX tokens being minted over the course of the first year. Daily, randomly selected REX holders' addresses receive BNB rewards in the Big Paydays feature. This means that those who have participated in the auctions may just get back the BNB they used to buy REX in the first place, which is something you will never see on decentralized exchanges. The REX ecosystem has REX tokens at its heart, but there are 2 additional support tokens stakers can take advantage of to increase earnings and flexibility. The tokens basically consist of TREX, which is an optional token that improves the user experience. The MREX, the MREX token, supply is limited to 10,000 with a 20 cap per address. It boosts referral rewards, unlocks special functions such as naming and moving stakes, and improves limits to auctions. The REX website provides functions allowing users to easily buy tokens on their dashboard. It also makes it easy to stake REX tokens, and when staking, tokens are locked for a period of time to earn interest. When a stake reaches full maturity, investors can close the stake to receive their principal plus interest without penalty. Otherwise, huge shout out to REX for sponsoring today's episode. Definitely make sure to check them out in the description below. Also, make sure to smash the like button, comment, and subscribe, and I'll see you in tomorrow's video. Peace.